Hello and welcome to Gold and Silver Assets. It's Sunday, the 3rd of January 2021. And of course, the start of a new year is usually a time when we look to the future. What lies ahead for us and for the world? Today I'm going to review a prophecy that I think may provide a useful guide, particularly because it's been pretty accurate so far. For those of you who don't want to know what's coming, spoiler alert, and just skip straight to the market report. I've got the timestamps down below in the comment section. For the rest of you, let's go ahead and look at this. Of course, I'm referring to the book, The Fourth Turning, and I think this is a really insightful book. This was first published in December 1996, and it predicted that the next fourth turning would begin at around 2005. The prophecy regarding the fourth turning that we are currently in is described in great detail in chapter 10 of the book. This isn't just any old prophecy. This wasn't just made up and plucked out of thin air. No, this was actually based on looking at centuries of history. It's also based on the concept of time being cyclical in nature. And this is in contrast to the ideas that many humans have of time being either chaotic or linear. And societies have actually tried to suppress the idea of cyclical time in order to try and feel more in control, as if society's destiny could be completely self-directed. Those that believe in linear time also believe in happy endings and that the future can be extrapolated in a straight line from the past. However, in the end, cyclicality does rule. The prophecy is also based on the existence of 4 generational archetypes that have recurred throughout history. And each generational persona unleashes a new era or turning. Overall, I believe that this prophecy is the product of extensive historical research, and I think it's got really strong merits. So what is the fourth turning? Well, if we consider each turning to be a season, then the fourth turning would be winter. It's a period of crisis, an era of upheaval during which the old order is replaced by a new one. And just like the seasons, there's no exact date for it, and the transition is gradual. It can come a bit early or a bit late, it could be mild or a bit severe. But one thing's for sure, it can't be averted. Winter always comes. Previous fourth turnings include the American Revolution, the US Civil War, and more recently the Great Depression and World War II. And we can see that they varied in duration from 5 to 22 years. Also note that there's roughly 80 years between each fourth turning. The prophecy stated that the fourth turning would start at roughly 2005, but remember, there's no exact set date for these transitions. The spark for this turning might be a financial crash, a national election, or a rapid succession of small events. That would lead to a chain reaction that would lead to debt, civil decay, and global disorder. I think it's fair to say that all of that has occurred so far to some extent. The book also predicted that a state would lay claim to federal taxes, terrorist attacks would occur on America. Remember, this was in 1996. Federal budget impasse and government shutdowns would occur. There would be a spread of a new virus that would lead to mandatory quarantine measures. They also said that gold and oil prices would soar, which they actually did from 2000 to 2008. Considering that the book was written in 1996, I think it's fair to say that the predictions were surprisingly accurate. Particularly in 1996, the world was a very different place. and linear thinking wouldn't have come up with all of those things that we talked about. But the current fourth turning is not yet complete. So what else is to come, according to the book? Well, they mention that people will come to the jarring realization that they've grown helplessly dependent on a teetering edifice of anonymous transactions and paper guarantees. Debtors won't know who hold their notes, homeowners who owns their mortgages, shareholders who run their equities. The book also predicts a great devaluation, either in the form of a short, horrific panic or a series of downward ratchets. There'll be loss of trust. People will not be entitled but authorised to receive whatever they got from the government. The US economy will become less globally dependent. Businesses will be cartelised. Well, that's happening already. And workers will be more unionised. There will be economic distress, social distress, cultural distress, technological distress, ecological distress, political distress, and military distress. That's a lot of distresses. Having said that, though, when I look at this list, I can think of a lot of crap that needs to be cleared out from each of these groups. And sometimes it takes distress to clear out the junk. It's sad to have to say that, but yeah, I mean, I could go on a rant about problems in each of these sections that need to be sorted out. And if we just carry on as we are, it's just not going to get cleared out. And in fact, it will probably just get worse. Okay, so how will all of this affect each generation? Well, the book does talk a lot about the different generations. And for the boomers, the crisis will expose the thinness of their private savings. As their savings devalue, the elderly boomers will become more dependent on the government, just at the time when the government is less able to pay them benefits. Boomers will be at the vortex of the downward economic spiral, and the money just won't be there to support the consumption habits that they had become accustomed to. And then we move on to Generation X. This is where I sit. And for us, well, we can expect our incomes to stagnate. Well, yeah, that's pretty much happened, I think, for a lot of us. Most will lose ground, but they'll do tolerably well. And some will actually become destitute. Many a midlife career will be quashed. And for those that continue in their careers, their peak earning years will be burdened with increasing taxes. And then we move on to the millennials. And millennials will face large debt burdens, dwindling jobs, and huge tax burdens. This generation will also tend to embrace collectivism. Sorry to start the year with all this doom and gloom with this prophecy, but look, this is potentially the reality here. And we really do need to take note of this, because actually this prophecy has been right so far, I believe. In which case, look, we are well into winter. I reckon we're more than halfway through this current fourth turning. And with most fourth turnings, it gets worse in the second half. But of course, it's not all doom and gloom. Remember that winter is always followed by spring, and such is the case with these turnings as well. There's a lot of rubbish that needs to be cleared out. It just takes a crisis and something quite drastic to clear it out. And that paves the way for something a whole lot better. Of course, as with the seasons, we can't stop them from happening. But what we can do is prepare and take action. So if we can see what's coming ahead, if we know that winter is on the way or winter's about to get worse, there are things we can do to help us get through it. And I think that's the main point here. It's not to be negative and, talk about doom and gloom all the time. It's about doing something about it, saving yourself. Next up, the market update. Before we start with the charts, I've just got a question for you guys. So I know someone in the UK who is looking at buying a miner, and that miner is listed both on the US exchange and the Canadian exchange. And they're asking which one should they put their money in. It's the same miner, but just obviously two different listings. So my initial thought was, well, that's really an issue of currency because, of course, they're investing in pounds and converting it to the respective currency. And, if they're going to hold for a short time, it probably is not going to make a huge difference, in a few months or whatever. But if they're looking, say, 3 years from now, which of those should they do? And, that got me thinking, which is the best to do, Canadian or US? Which of those currencies is going to work out best when it ends up, obviously, when it gets sold, the proceeds will need to be converted back into pound sterling. And also, the other thing is that the only factor to consider out of those two? So if anyone's got any ideas about that, then put it in the comment section below. Let's start with gold priced in US dollars, and we'll talk about the monthly scale. Of course, we've had another monthly candle, so I do like to take this broad overview at the beginning of each new month. And we've had a very nice green candle here. And not only that, but this is actually a bullish engulfing candle after a correction here like this. So for me, that's a very positive thing. If we look back here, we've had a couple of corrections on the way up to get to the above 2000 level. So one of the corrections was over here. And again, we had a bullish engulfing candle before it made its way up. Now, of course, this candle was rather strange and unexpected, kind of an anomaly there. But the other correction we had was again down here, and here we had a bullish engulfing candle followed by a strong move up. So I'm wondering, is that what's going to happen here? I think it's a positive sign, but let's see. But it's a good start. One of the reasons why I thought that this was the bottom over here of this recent correction was based on the price action over here. And this actually corresponds to the top of these candles over here. So these big bars here. If we were to drop below that, then you've got a lot of support just below that over here. So I'm not too convinced that we're going to get a drop below there, purely because we've got a lot of dense support over there. Now, there's no guarantees with these things, but I don't know, the fundamentals seem to fit with that. Let's move on to gold priced in US dollars on the daily scale. And this is the recent correction. And this has lasted quite some time and seems to be moving in this channel formation. We had a very nice bounce back up to this trend line over here. And interestingly, it depends on which chart you look at. So if you look at the gold futures chart, for instance, then it's actually poked above the line. So you could say it's already broken out on some other charts. But let's stick with what we've been doing all along, in which case this is a potential point of resistance. If we break through that, then I think we're heading up towards the previous high at the very least there, around 2070. But look, let's not get ahead of ourselves here. We do need to actually break through that. What patterns have we got here? Well, we had this line up here, so this could be a channel, in which case we kind of need to break out in one direction or the other sooner or later. The other thing is we've got what could be a bit of a triangle here. It's a bit of a push there, but not sure if that's a triangle or not. I think I'm going to make a guess here. You know, I like to just take a stab at things. So I reckon maybe we'll take a little bit of a dip and then come out through there. There is a potential for this to actually break below this channel, but I still wouldn't be too worried then, you know, because I think there is good support at around 1840, 1850, in which case this would just be what's called a partial decline before making its move up. So I'm looking at one of those two scenarios there. Now, interestingly, I was looking at the 30-year US government bond yields, and this has been moving up in this channel. Again, this is just like gold, but in the opposite direction, I guess, in terms of the yields. And again, it seems to be on the verge of a breakout over here. Now, one possibility is that it could just turn around here and break out upwards. What we've got is this triangle forming over here and prices squeezing. Now, according to this, sometime within the next 2 weeks, we should get a breakout. I'm probably thinking sometime within the second week. I think next week's going to be potentially a quiet week, just because not everyone will be back at work and so on. And so maybe the action will happen around, maybe from the second week of January, but that's just speculating, I guess. Anyway, so this could break out upwards, in which case bond yields will go up. To me, this is just looking like it's going to break down here. So bonds will get more expensive and yields will go down. And that will give us a target of around 125 potentially if we measure the height of this channel. But yeah, that's something to watch. Now, why is that relevant to gold? Well, I've drawn this chart here. So we've got the government bond yields, and in orange here I've got the gold price, and below I've got the correlation between the bond yields and the gold price. And one of the things, if you looked at this on the monthly scale, what you'll see is that since around the year 2000, the correlation between US government bond yields and the gold price has become increasingly negative, which means they move in opposite directions, and that correlation has become stronger over time. This is on the daily scale, so you're going to get these kind of flips up and down. But if you kind of look at it from a broad point of view, you can see that for most of the time this correlation is negative. So that means that when bond yields go down, gold prices go up. And so if we are postulating a breakout here downwards, that would suggest this again, we're in this channel here, a breakout upwards in terms of the gold price. And again, that would potentially happen at the same time. So we're talking around the second week of January. But look, that's just speculation. Let's see what happens. Let's move on to silver priced in US dollars on the monthly scale. And we've again had some excellent price action this month. We've got, just as with gold, this bullish engulfing candle on the monthly scale, which is, I think, quite positive. Of course, when we look back here, this is quite dense price action here, so this isn't going to be easy to negotiate. I think once we get past around $35, $36, then there's not much to stop it going to 50. But until we get through this, there's going to be a bit of toing and froing here in terms of the silver price. But I don't know, silver's been behaving pretty strongly so far. Now you'll remember when we broke out through here, I thought that there was quite a bit of thin air in this price region here, just because, there's not much price action there, but we'd encounter troubles around the 27.28 level, which is what happened. It got knocked back initially quite severely, but it bounced back pretty well. And this just shows how useful it is to look at prior price action and resistance levels and so on. It can just give you clues. It's not 100%, but it just helps. And of course, that's where we're going to come to a problem when we reach blue sky territory. Both already gold, we had reached some blue sky territory. I think we're going to go there again. And that does pose problems in terms of chart analysis, because you've got nothing to work with other than, support below, which is what we've been working with lately. So when price does go up, what am I going to do? Well, I've got a couple of ideas, and so I'm going to do a show on that. And initially, when I was doing these shows about a year ago, I remember thinking, what if gold goes above 2000? How am I going to analyze this? But actually having to put something down on video to you guys actually forces me to seriously think about it. I think if I was just doing it on my own, then I probably wouldn't be quite so pushy with myself about trying to get some ideas there. Anyway, that's going to come up soon, but let's move on to silver priced in US dollars on the daily scale. And price has been stair-stepping upwards like this. Now, this $26 level we said was going to be resistance, and price went up there, tried to poke through there, came back down below it. It stayed below it for a little while, but what I'm finding quite encouraging is that it went back above it, and now it's using that $26 level as support. So if that continues to hold, I think that's quite promising. And I think we're going to move between this $26 and $28 level for a little while to come. The reason I say that is because of all of this here. This is going to pose a bit of a problem for a little while. But I think, as I said before, I think it's just going to fight through it. This isn't looking particularly weak. Of course, if this does break, then yes, we could get a down move, but I'm not expecting anything major here. We've got quite a few support areas below, particularly at the 25 level. And look, I really, really doubt it's going to come down to here now. So, but that would be the next support level, is this downwards trend line. Of course, look, you've got to be open to all possibilities. So I'm keeping those as potential options. But so far, the fact that this has remained good support in the last few days is promising, and just makes me think we're going to move up in this area. What about the miners? Again, we'll have a broad overview by looking at the GDX on the monthly scale. And this doesn't look quite as promising as the gold and silver did, because this candle, it's kind of an indecision candle. But let's see, that doesn't necessarily mean it can't go up. But we don't have that bullish engulfing that we do have with the other two gold and silver metals. If we were to go up, looking over here, you can see that we've got quite a bit of resistance here. So probably 54.55 would be our next target. And then above that would be kind of 62-ish over there. But yeah, I think we've got a little bit of work to do before we get up there. In terms of downside, to me, this looks like a curve over here. Obviously, we've got this anomaly here, and we're just seeing that on a lot of charts. And it might be, I don't know whether we should disregard that. One possibility is that this is a double bottom, because I mean that price is pretty close to the absolute bottom here. So that could be what's called an even Adam bottom. But either way, I think this is the bottom. I just can't see us going back down here again. In which case, if we've got this curve here, then probably the lowest we'll go is around here, which would fit with the tops over here. So this is a long-term resistance level over there. So I'm thinking that's probably the maximum downside there. So we're looking at around 31, 32 for a bounce to occur. And of course, we've got a lot more upside there. Let's look a bit more closely by looking at it on the daily scale. So this is again the GDX, and we had this down sloping channel, and it did behave a little bit strangely and poked below that, and now we've got this upward sloping channel. But it's kind of leaning on the lower end of this though. But you know, maybe it will just go down here and then start moving up. Or the other possibility is that we've got this downwards move here, and this could be a flag, and then we get one more down move here. But as I said, I'm thinking 32 is probably as far as it will go, just because there's so much support there from previously before we get a bounce. But all of this will depend on what the gold price does. And finally, let's look at the SILJ, and this is on the daily scale, and I've been kind of fiddling around with this curve. It's a very, very subjective thing. You know, if you try and draw the curve, you'll get it slightly different to how I draw it, and I don't know which is right. I'm kind of looking for a more objective way of joining these things, but I haven't quite come up with something that's perfect yet. I guess nothing's perfect in the markets. Anyway, we've been moving up nicely here. Now, the 16 level was a little bit of resistance, but it actually broke through that in the last couple of days. And the next resistance is 17. Now, I don't know. I kind of feel like we need one more test of this line before we move up, but it doesn't have to, I guess. And again, it depends if whether I've drawn this correctly. But 17 is the one to watch. Once you get through 17, I think we're going to have some big moves up. I hope you've all had a fantastic break. I know it's back to the grindstone for most of us. That's it from me for this week. All the best and see you next week. Bye.